I'm going to be teaching a female trader on how I basically trade, from my strategy to how I basically find trades and my entries, risk management, and a bit of psychology. And without any further ado, let's have our guest.
Hi guys, my good name is Stella Munyiva. I'm from Nairobi, Kenya, 23 years old. I'm super excited, guys. You know what? I'm gonna meet Mr. Vidola himself. I've been in the game for around 5 to 6 months, guys, but I'm not where I wanna be, so that's why I'm here today. At least I want to learn some few secrets to make more money. At least I get myself a Mercedes Benz like you.
Okay, that's impressive. Would you say trading is easy or difficult?
Yo, been losing money, but what I've learned today, the support and the resistance, the demand and supply, easy peasy.
The trend is your friend.
Now it's starting to make sense, guys.
Do you think we would look at buying or selling?
I think so. Is it true?
She's cooking. She's very active. I like it.
Guys, I think this is gonna change my life. You have to be profitable.
Exactly. Also, another thing that I wanted to emphasize is, so this is what we shall look at, yeah? So I'll go ahead and break down my strategy. I'll also give you a bit of my risk management plan and then psychology, because it's like the biggest thing in trading. We shall talk about that in a few.
Guys, I'm with the best. We're about to get
actually,
ready.
Okay, cool. So I think without any further ado, let's get right into it. And please feel free to ask any questions if you feel lost, okay?
Anything concerning money, you have to be active, guys. I hope you're also active.
But Stella is very
with
active.
the best.
Yes, so
in
please.
The Forex industry
Please.
here in East Africa. Is it East Africa or Uganda?
No, East Africa.
Are you sure?
Exactly. Okay, cool. So let's get right into it, yeah? The very first thing that I look out for is the trend, okay? So you'll hear this often. The trend is your friend. And almost every trading strategy basically uses the trend. So in other words, this is how the market moves, okay? So say we have an uptrend type of a thing, okay? Or we could have a downtrend, and this is how it looks. Say that. Or we could have a consolidating market, something like this. You get, yeah? So now the question is, how are you supposed to react in here? You say we have this uptrend. I want to look out for buys. I hardly trade against the trend. And if say we have this downtrend, I need to look out for sales, okay? And then for a consolidating market, to be honest, I'll hardly trade this. And I think it's not a good idea, and I'll tell you that. So no trades. Why? You see, in a consolidating market, the market is basically moving from this point to this point, then to this point, then to this point, and this point. So in other words, there is no significant moves. That means if say you bought here, okay, the price goes up and then comes back. So it means you had made money, but now you're back to zero. Goes up, again drops down. So there's nothing happening. But the good thing is, every time there's a consolidation, you do expect a breakout. So it could be a breakout to the upside or a breakout to the downside, right? So I would say, rather than trading consolidations, why not wait for clear trends, right? Perfect. So
too much information, I beg. Let me sip some water.
Is that too complicated?
Somehow.
Really?
Buys, sells, consolidation, I don't know.
Cool, look, okay. Now let's make it even more simple, rather simple, okay?
Yeah.
So this is an uptrend, and this is how an uptrend looks in the real markets, okay? So you have this, you have a pullback, you have a push, you have a pullback, and then we have a push, okay? So for an uptrend, we have these levels here. So we have these as higher highs. Okay, let me just reduce this. There you go.
Higher highs, meaning you're going up and up and up.
Exactly, yeah. Then we have this is also higher high.
Guys.
We have that, and then we have this, okay? Then on the other side, we have this over here, okay? So you could also call these your higher lows, okay? So the higher lows, because the trend is going to the upside, but they are lows, okay? These are highs, but then these are lows. So we should also just label this way. And there you go, right? Then on the other side, we can also look at the price in this sense. So we shall have this as a push phase, right? So we shall call this a push.
Jesus.
No, that's easy. In other words, hey, this is easy. Because look.
What are we pushing here?
Look, as the price is moving, yeah? We have a push phase. I think the easiest way to bring this out is, now since you made it this far, I invite you to the exclusive family by smashing that subscribe button. The goal is 1 million subscribers and you can be part of this exclusive community. We have a saying, less talk and more action. And with that, let's dive straight back into the video. If say we are buying, right? Let me give an example. Say we are buying iPhones, right? Everyone is buying. The price is going to go up. Because there's too much demand, in other words. Type of a thing. So we have a push phase. But now the thing is, whenever we have a huge push phase, at some point we do have what we call like an exhaustion for the price to finally pull back. Okay? So we have a push phase, a pullback, a push phase, a pullback, a push phase. You get my point? Or you can also call them momentum. Like this is a momentum phase.
Momentum again, a big.
Is that too complicated?
Momentum, push.
No, okay, just call it a push phase.
Oh, nice.
Okay. Then we have this as a pullback. At you know that, right?
Yeah.
So I shall call this bad boy a pullback. Right over there, okay? So that means if you have this type of a market structure, you can very well tell that, okay, it's an uptrend, right? Either we can also mark out these levels. You should be wondering, why, Daniel, why are we doing that?
Yes,
well,
yes.
Okay, so the idea is, you see this was a higher high, right? So for us to confirm that the price is pushing up, we should at least see the price breaking the previous high, not so. In other words, if we look at this, look, so we saw the price push, it had a pullback and then a push, but within this push phase, it has to break this previous high for us to confirm perfect. So we have same phase, pullback again, you see that? So to just label these levels.
What do we call that? The breaking, whatever.
Now let's label them, yeah? So for some traders, they do call these break of structure. So you could easily just label them that way. Or for me, I do call them valid breaks. I'll just say valid. Yeah. Why a valid break? Because, I mean, you can very well tell that the price, that the price has broken the previous high, okay, to form this new high, you see? So just call that a valid break. You get my point? Cool stuff. So now, the idea is we need to watch out, most importantly, for these levels here. It's down here, and I'll tell you why in a minute. Okay, the idea in here is we don't want to take a trade when the price is already in a push phase, okay? So we are not taking any trades during these phases. Right in here, we are not taking any trades. But
why? And the market is moving.
Okay, now this is the thing, yeah? So you see, whenever the price is already pushing, remember, sooner or later we are going to have a pullback. You notice? We have a push phase. Sooner or later we shall have a pullback. So actually the best areas to take your trades on are these areas here. You see? Because think about it, you don't want to enter trade and then by the time you enter trade, that's when you see a pullback. Remember here you're beating a bit of profit and so forth, but then now bang, you have a pullback. Now you're back to like zero or minus. See? So actually what I want us to put our emphasis is right around these areas. So we have this, yeah? So we need, actually, as we now start analyzing, not trying to find trades, you shall notice that we can only take trades right around these areas. So if we are looking for buys, we could say, okay, look, I want us to buy from here with our stop loss just slightly below this area, and then say I'll take profit at the valid break, okay? Now, we can just quickly look at how a downtrend looks.
Downtrend means you're going down, you're selling.
Sure. And
when you sell, you also get money, yeah?
Yeah, obviously.
But not, is it much money as you're buying?
That's a very funny question. Actually, almost everyone asks it. Like, can you only make money when the price is going up? No, look. So the idea is the market is either going up or down, right? So you'll still buy if it's going up and still make money because the value is going up, or sell when the value is going down and still make money.
That means we don't stop making money right here.
Exactly.
Every day is a day to make money.
Yeah. Every day is payday. That's the word.
I can't wait to be profitable, guys.
Please. So in a downtrend, we have this, and we shall call this our lower lows. This is just the opposite of what?
Higher.
Higher highs. Then we can also just, that's a valid break, not so. This is also a valid break, or a break of structure, as we said.
Everywhere we have breaks.
Yeah, because again, remember, that's like the standard way of how the price moves. So for some reason, as long as it's in a continuous
But now
trend,
the breaks here are better than the heartbreak, guys.
Have
You
been
need to
heartbroken?
trade.
Traders, I don't know. Traders just hard guys.
Yeah. They are. Guys, it's not
Anyway,
good here.
cool. There you go. So same idea in here, another trend, rather the price going down. Okay, so we have this rather this as a push phase, but not a downside, not so. So push phase. There you go.
Push, guys, push.
Yeah,
Phase
push
1.
phase.
Do we have phase 2?
I mean,
There's only one.
No, we could call this phase 1, phase 2, phase 3, and so forth. You get.
Yes, guys.
So we have a push phase, and then on the other side, remember these are called pullbacks, right? So we shall call this our pull.
Pullbacks, guys.
And then, so same idea, push phase, pullback, push phase, pullback. We can also just label these levels. So again, in here, we need to find our trades right around these areas. You don't want to take trades once the price is already in a push phase. You get it's the same idea. Now, for the moment, it's already pushing. A pullback is coming up anytime sooner or later.
So just wait.
Exactly. Perfect. So I think we now understand the whole concept. Again, as I mentioned, for consolidations, honestly, nothing is happening. And I don't want us to trade or look at that either way. So consolidating market.
Confused one.
Yeah, exactly. Actually,
Guys,
confused like.
Consolidating market is confused one, like your relationships.
Oh my days. You cooked. That sounded like, yes, from ChatGPT or something. Okay, so for consolidating market is like, look, so it's the price from here, push, pull back, push, pull back. So there's nothing really happening. But either if you say, okay, cool, you want to trade the consolidations, well, you could look at buys at these areas. So you buy from here, hold. It's mostly for like scalpers.
How will I know it's about to reverse from this whatever?
Oh, okay, so you see, you draw these levels, okay? You could also call that, you could call this your resistance, then this your support, okay? So in other words, you can always say that, okay, if the price did come here firstly and then drop, there's a huge possibility that once it comes back to this level, it's going to drop. Once it comes back to this level, it's going to drop. Or if it comes back to this level, it's going up, going up, type of a thing. Cool stuff. So I think let's now go to the live chat straight in and see. Okay?
Yes, guys, let's now try make
Lock
money.
in. No, let's lock in.
I hope I'm
first.
gonna make money today. Are you sure?
Yeah. No, from what you learn, okay?
No,
From
I've
what you
already
learn,
known higher
yeah, so
low,
from what you
higher
learn, you're
highs.
going to analyze, and then what you analyze, I'll go ahead and take that trade. So if we lose money, you pay me back.
Jesus Christ.
And if we do
What's
make
going
money,
on?
that's it.
Or if we make money,
If we make money, yeah, I'll keep the money.
I'll
since
get
it's my account.
No, I'm going to get the money, all of it, guys.
Yeah, cool. So let's go, yeah? So, now this is
Cross the
gold.
fingers for me, guys. We need to make money. God, I beg.
And if you blow the account,
Jesus Christ. We need to make money here.
all right, cool. So let's go. So, now this is on gold. And I want us to look at a more live example, okay? If we look at how the market was initially moving in here, it's like a clear uptrend.
Why is
that's
your
all.
chart blue and black? What's
Or
going on?
you can always decide to change the colors. So default it's green and red, but in here I did adjust where we have the blue candlesticks as bullish and the black ones as bearish.
Oh.
Got you. Cool. So when you look at this, you can very well tell that there's an uptrend. Not so. Why? Because look, the market is basically pushing, pulling back.
What
pushing.
time frame is it?
Is on the H4.
Oh.
Now, it's also very important to understand that whenever you're trying to find the trend, let me actually write it down here. So for the trend, use higher time frames, okay? Overall trend, you're trying to find out, is it an uptrend, is it a downtrend, and so forth. It's better to start with bigger time frames and you kind of scale down and so forth. We shall talk about that. So in here, we can very well tell that it's an uptrend because we see the price pushing up, push, and so forth, yeah? Then we can also see we have this, yeah? Remember the higher highs.
Oh.
Higher highs, and then just like what we just looked at in
Lower
our
lows.
illustration. You get my point.
I see.
Good
Nice.
stuff. Yeah. Either way. Now, when we also look at this huge drop here, that was a downtrend. Not so. Because we see the price out of the blue just bang, we had a drop. So you get my point?
Yeah.
Cool stuff. So now let's just go ahead and now apply what we just learned.
So this drop, is there a break of structure somewhere there?
Yes. Yes.
Guys, I'm getting it.
Actually, you're cooking. You're very active.
Boss,
I
boss,
like it.
boss. I'm the boss.
So now let's just go ahead and identify what's happening in here, okay? So we have an uptrend, and we could just go ahead and mark out this level here. Why? Because remember, we had an uptrend. You get?
Yes.
And this is the highest point where the price did come to, okay? So we shall just label this as our swing high.
Now we are swinging again. It's not higher high. It's not
Or
higher.
either you can also call it a higher high, just not to confuse you, because it's a higher high either way.
I was like, how we swinging going to, guys?
Cool, got you, okay? Then on the other side we have this. Now remember, price went up and then we did have this drop, so we shall call this our swing low or our lower low, to say so,
Swing
right?
low, guys.
So swing, I think you love the word swing, I don't know why, but swing low or lower, lower low, you get my point, yeah? Now we need to also perhaps draw even other levels, so we could just
We
also
still have other levels here.
no, I mean, you can draw as many levels as you want, as long as you don't get confused.
Oh.
Because look, so we also have this, because when we look at this inner price action here, or internal price action, you can also tell that there's a small uptrend. Do you get my point?
Oh, yes.
So the price gets here and then it formed this high. So we can also label this as a high. Not so. Let me delete this bad boy. And I mean, you could also now label this down here as another low, right?
Jesus.
That is easy stuff. By the way, for the fact that you're still watching, I mean, it's easy. So please just say it's easy to camera.
Guys, I'm forced to say it's easy.
Come on, come on.
Because I will say, but I will say it's easy when I make money. If I don't make money, it's still
Okay,
not
and
easy.
by the way, once this video is out, I'll track your journey and see how you perform. And please, for the fact that you're here, then you better lock in and put in some work,
This is
yeah?
my year, guys. This is the year that I'm going to make a lot of money.
Let's get
You
it.
better get
Let's
ready.
go. Very locked in. Okay, so the idea is we have the high, we have the low, right? So now we need to look at what the price is actually doing, okay? Remember, actually, this is like the same concept that we just discussed. So we did see a push, then a pullback. So we expected the price to push up, not so because it was initially an uptrend. But then actually the price does the opposite. It breaks out and then it's now dropping. You get? So to maybe just quickly give you an overview. There you go. So
It didn't reach the highest high that we had.
exactly that we had initially, right? And now it's dropping. So
Okay.
at this point we would change our narrative.
This
and
one
say-
looks like a resistance, is it?
Yes, this over here. Let me actually illustrate that. That's cool stuff.
And why do we call a zone a resistance?
Okay, the thing is, yeah. So say we have that, and then we have this. Okay. So the idea is, the price is going up, but then instead of breaking up, it's resisted and then forced to push back down. At this area, it finds support to push back up. Guess
Can we
this
call
area,
it a resistance because of one, maybe
one price reaction. Well, yeah, because okay, let me give you an example. Say we had
in
this.
higher
yeah?
time frame or lower time frame?
Both. It works on both. So say we had this. It's valid to say that this is actually not even valid, but what you do is, let me give you an example. Okay, so say we had this, right? Price got there and then it dropped. Well, if you are drawing your zone, it's valid to say, if say we draw this zone, remember you're drawing it because the price reacted over there. So you could anticipate and say that if the price gets back to that zone, well, there's a possibility that it's going to drop back down. Or if the price gets back to that zone, there's
Question.
please.
When it reacted for the first time, is it a strong resistance or just?
Okay, so for a support and resistance specifically, we need to have at least 2 reactions, okay?
Nice.
So we can only confirm this and then this. Then you say that it's all good. You get my point? So that obviously that also applies to what you dust here, right?
Yeah, I
So
can
now-
see that here. 1, 2, it's even more than 3,
Yeah,
right?
yeah. Another price is dropping down. So maybe just a quick random question.
Bring it.
Do you think we would look at buying or selling?
We're already at the support level. Has it broken the support
We are
level?
looking at this. Remember the price came to this level, resisted, and then we see a drop. So do you think we could consider buys or sells?
I think sells. Is it true?
She's cooking. She's very active. I like it.
Guys,
That's cool stuff, yeah. So the idea is, okay, we see a drop, okay? Now remember, we are doing all this on the H4. So let's just quickly scale down to like the H1. We can very well tell, all right? We can very well tell that now the price is dropping down. So what we can do here is we would look at taking our sales right over here, okay? With actually, let me just quickly go straight to like the M15. This here.
What time frame of 15?
Yes.
This is where you get your entries from.
Exactly. So bigger time frames are for the overall trend and then smaller time frames for entries, okay? So at this area, it's valid to say that, okay, we are going to take our sales, okay? So
do you have a specific thing that you check, like signals or something?
Please, yeah. No.
Now,
Now, remember, from what we've just seen, let me just quickly go back and show you all the confluences, all the confirmations that we needed, okay? Initially, the trend was to the upside, but we've seen a change, okay? With the price breaking the previous also support, if you want to call it that. So the price is dropping. That's like the first thing to confirm with, right? Then we go over to the H1. On the H1, it's even more of a confirmation. We said we have a drop, we have a pullback, we have a drop, we have a pullback. Not so. Remember, we said we can only take trades on pullbacks. And then lastly, for entries. Now for entries, it's a must always scale down to smaller time frames. It's like important. Okay. So now on the M15, this is it. So on the M15, we can even very well tell that we did have that. And it really looks proper as a good pullback. Look at that. So we have a drop, then we've had this
starting
pullback.
to make sense, guys.
And now we have that. So if right over here would look at taking sales, if say we had our sell entry over there, now for the stop loss, we could have it right around this area here. Now most people do ask, okay, how are you supposed to place your stop loss and so forth? And it's a better idea to have your stop loss just above a key level rather than saying, oh, I can only risk 20 pips on a single trade. That doesn't make any sense, because you could risk 20 pips, but then the trade is going to break out and then later drop. You get my point? Okay. Exactly. So we have
that's easy.
Yeah, I mean, the objective was to make it really easy.
Cheers. Twas.
Cool stuff. Let's go. Locked in. I like that. Okay, so that's the idea.
Just like that, you're about to make money, guys. I think you've simplified it so much.
Maybe just a quick recap. So we have the trend. You need to identify what the trend is. Then number 2 is draw all your key levels. Okay, it's like your swing high, swing lows. Now remember, as finding the trend, it all starts from the bigger time frame. Okay, the H4. Then for entries on smaller time frames. Okay.
Yo, this is the simplest strategy I've ever seen.
Some questions, yeah.
So do you like trade in a certain session or just any time you just enter the market?
Well, I think it's very important to have a specific time that you get to trade. I personally trade the London session, just like right now. It's currently midday. So I do trade the London session and the New York session. So I wouldn't say, oh, wake up and trade the Asian session. No. So it's very important. Okay, the thing is, you could find times that you really feel a fit for you. If you feel like I can only trade during day, then well and good, choose the London session or the New York session. But also it's important to trade when the markets are most active.
Because there was a day I woke up very highly. It's around at night. Yo, I lost all my money, guys.
Bro, you
trying to get money at night.
Trading at 3 is crazy.
It's crazy, I swear.
So like you can't wake up and say, oh, I'm going to take a trade. No. Also, another thing that I wanted to emphasize is it's better to trade when there is high volatility or when there is momentum in the market, okay? So we have the London and the New York session, okay?
Which session is more volatile?
I'd say the London session.
It's not New York now.
It's a bit tricky, but from what I can say, okay, the London and the New York session. Okay. Yeah, these are like the most traded sessions, so better. So the London session should be from 10 a.m. East African time up to about 6. So we're currently in
6 p.m.
Exactly. So that's pretty much how the strategy is, and that's how easy it is. Okay. Now let me just quickly highlight a few things about risk management, okay?
Easy.
Okay, so if you're trading with no risk management, well, you are such a good gambler, is it?
Really?
Yeah, because remember, when you're trading, you have 2 options. So it's either you're buying, either buys or sells, right? So it's either you take a winning trade or a loss. So in other words, that's a 50% win rate.
What is this
50%
full margin?
probability.
I hear people say, I'm going full margin, I'm going
Full margin is like risking your whole account.
So they don't have a risk management, whatever.
Yeah, and it's stupid. It's very, very stupid because one
You can
trade
make
could
good money, yo.
Okay, well and good, you've made money, but then the next trade could wipe you out and you're totally cooked.
Does that mean you are profitable when you go full margin?
No, you never get profitable, by the
Yeah.
way. You never get profitable. Exactly. Okay.
You have to have risk management for you to be profitable.
Exactly. So risk management is you need to understand how much money you want to risk on a single trade and how much money you intend to make on a single trade. So the standard rule is risk 1 to 2% of your account. You get my point? And that means if say you're trading, let's say with let's $1,000, right? $1,000, you can risk 1 to 2%, which is about is that $10 to $20. So you're basically risking 1 to 2 to make, let's say 4% or 5%, whatever. You get? So if you have a standard risk management plan just like this, it doesn't matter whether you had losing trades. If say you even took, worst case scenario, say you took 10 trades and lost 5 or 6,
Jesus.
you still have the account. Yeah, because some days, you know, you get to have a losing streak and it's totally unavoidable, but that's the crazy part. So risk management is very, very important. Perhaps we should, you know, have a detailed session on how to understand risk management.
So
Okay.
do you mean like losing is part of the game? Seriously?
Well, it is. It is.
Yeah. I
Sure
thought
is.
you're supposed to make money every time we enter the market. So there's days we lose.
Yeah. So losses are inevitable, and someday you'll have a loss, and maybe a losing streak.
A whole week?
Yeah, I've had like 2 weeks.
Let me go home, guys.
I've had like 2 weeks. But the thing is, you could also have a winning streak.
The
which
whole week.
Could even be a month. Who knows? You get. So anyway, what I'm trying to drive home is you need to have a balance. You need to understand that okay, at some point I'm going to take losses, but then someday I have wins. Okay, so I need to find a balance. In other words, if you're losing, lose less, and if you're making, make crazy tons of money. Okay?
I have a question.
Please.
So how long have you been in the game first?
6 years.
When you are starting, I know you are maybe losing some big amount of money. Like, how are you trying to avoid that?
Well,
When you are
risk management.
starting.
No, risk management. Okay, let me just quickly share a quick snippet of my story. So when I was starting out, I was like trading small accounts, you know, 20, 30, like I would make a bit of money, but then later lose almost everything back. Then I get to a point, I'm like, okay, but I would also fall for over trading.
I thought I was
But then I
alone.
realized, okay, if you're looking at getting profitable, you can't get profitable that way. You can't risk more than what you intend to make. So like I would make a bit of money, but then when I take a losing trade,
Lose all of it. Which is
and then yeah, like the cycle was repetitive until I came to a point and say, cool, you need to change. So it's better to look at it as gradual growth than trying to make like a ton of money today and next day it's all gone.
So you mean this is not something for short period? You have to build it for
you have to
long
lock in, yeah. You have to lock in and build gradually.
time. Long time, guys.
Let's get it. Cool guys, so I do hope you guys did enjoy this video, and please be sure you hit the like button. If you also want to get exclusive mentorship or just like how we just did with Stella,
Exactly.
well, I'll put a link down in the description. Fill the form and then one of my team members will reach out, perhaps through a direct call. And as well as keep it less talk,
More action.
love
Guys,
that.
that was
Love
nice.
that. And then motion must be forced. Let's go.